When war breaks out, most people react emotionally. Gas prices spike overnight. Stock markets plunge. Breaking news banners flash in red. Social media fills with fear, speculation, and outrage. For the average person, war feels sudden. But for billionaires, it rarely is. When Russian invasion of Ukraine began in 2022, the public response was immediate and chaotic. Markets dropped sharply. Governments issued emergency statements. Corporations scrambled to reassess operations. But behind the scenes, something very different was happening. Private risk offices had already been activated. Ultra-wealthy individuals such as Elon Musk and Jeff Bezos don't wait for television headlines to confirm instability. They operate with forward-looking intelligence networks. Their teams monitor geopolitical flashpoints months, sometimes years, in advance. Think about that. Before the first missile strikes, analysts were already modeling scenarios. Sanction exposure, currency volatility, supply chain disruptions, cyber retaliation risks. War, to them, is not only a humanitarian crisis. It is a systems disruption event. And when systems are disrupted, capital, security, and mobility must be recalibrated. At extreme wealth levels, the game changes. Survival isn't about paying bills. It's about preserving influence, maintaining optionality, and protecting global infrastructure. They don't ask, "Is this bad?" They ask, "How does this reshape the global chessboard?" The billionaire mindset during crisis is strategic, not reactive. While the public consumes breaking news, they activate contingency playbooks. Because in their world, preparation isn't paranoia. It's protocol. And war doesn't create strategy. It reveals who already had won. When geopolitical tension rises, billionaires don't move houses first. They move money. Capital is fluid. And in times of war, liquidity becomes power. During periods of instability, including tensions between the US and China, ultra-high net worth investors have historically diversified holdings into financially stable hubs like Switzerland and Singapore. This isn't about hiding wealth. It's about distributing exposure. A billionaire's portfolio is rarely concentrated in one country, one currency, or one sector. Instead, it is engineered across multiple currencies, USD, CHF, SGD, gold-backed assets, multiple legal jurisdictions, multiple asset classes, equities, bonds, commodities, private equity. When war risk increases, certain assets become vulnerable. Factories in unstable regions, currency reserves exposed to sanctions, public equities sensitive to trade restrictions. So adjustments happen quickly. Historically, during events like the Gulf War and the September 11th attacks, investors rush toward safe haven assets such as US Treasury bonds and gold. Investors like Warren Buffett have long emphasized disciplined positioning during uncertainty, focusing on resilience rather than speculation. But here's what most people miss. These reallocations often happen before public panic peaks. By the time headlines declare a crisis, exposure has already been reduced. Hedging strategies are already in place. Currency swaps are already executed. War doesn't just move armies. It moves capital. And in every major global conflict, there is a silent migration of money, from fragile zones to fortified financial centers. Billionaires don't outrun war physically first. They outrun it financially, because if capital survives, recovery becomes opportunity. When global conflict escalates, the wealthy immediately reassess one critical pillar: security. Ultra-high net worth individuals don't rely on basic alarm systems or standard corporate protection. Their security infrastructure operates like a private intelligence agency. And during war, that infrastructure expands. Armored transport contracts are reviewed. Safe house locations are verified.
Résidentiel compound upgrade surveillance grid.
Private security personnel increase rotations. After major geopolitical escalations, executive protection firms often report surges in demand from elite clients. Risk perception rises not necessarily because direct threats increase, but because uncertainty does. Some prominent figures, including Mark Zuckerberg, have significantly expanded personal security operations during volatile periods. But today's battlefield is not only physical, it's digital. Modern warfare includes cyber attacks on infrastructure, corporations, and high-value individuals. Billionaires control sensitive intellectual property, proprietary technology, and global communication networks. That makes them potential targets. So cybersecurity budgets surge. Encrypted communications are upgraded. Cloud storage is restructured. Penetration testing intensifies. Threat intelligence firms conduct real-time monitoring. Because at the highest wealth tier, visibility equals vulnerability. The more influence you have, the more exposure you carry. Security, therefore, is not treated as a luxury. It is treated as core infrastructure, like electricity or water. And during war, infrastructure gets reinforced, not out of fear, but out of disciplined risk management. Because in uncertain times, protection isn't reactive. It's strategic. And those who understand risk fortify before impact. When instability rises, billionaires don't just think about defense. They think about exit. Many ultra-wealthy individuals hold multiple passports, not as souvenirs but as strategic assets. This practice is often referred to as jurisdictional arbitrage, the ability to shift residency, taxation, and legal protection across borders when necessary. During periods of political tension or war risk, second citizenship applications surge globally. Countries offering investment-based residency programs quietly report increased demand whenever geopolitical uncertainty spikes. Why? Because mobility equals leverage. Some high-net-worth individuals maintain properties in geographically stable regions like New Zealand or remote parts of Canada. Areas known for political stability, low population density, and strong rule of law. In 2020, multiple reports suggested tech executives were purchasing rural estates, fortified ranches, and isolated compounds in anticipation of prolonged instability. It wasn't about hiding from the world. It was about optionality. Private islands, mountain lodges, desert compounds, backup residences on different continents. If commercial airports shut down, private aviation networks activate. If borders tighten, alternative citizenships provide entry. If urban centers become volatile, rural retreats offer isolation and control. The wealthy don't wait until travel becomes impossible. They design escape routes years in advance. War is unpredictable. Political alliances shift.
Sanctions émergées au verdict.
But mobility provides flexibility, and flexibility preserves power. When the world feels restricted, the elite want freedom of movement, not because they expect collapse, but because contingency is a form of insurance. And billionaires don't buy insurance after the fire starts. They install the exits before the alarm ever rings. War doesn't just destroy, it reallocates. When conflict begins, entire sectors of the economy expand almost instantly. Government budgets shift. Supply chains reorganize. Research funding accelerates. Historically, defense contractors such as Lockheed Martin have experienced surges in government contracts during periods of rising military expenditure. But sophisticated investors rarely limit themselves to direct defense companies. They study the ripple effects. Energy demand shifts as trade routes change. Semiconductor production becomes geopolitically strategic. Rare earth mineral supply chains become national security priorities. Cybersecurity spending increases as digital warfare intensifies. Conflict accelerates innovation. During World War II, American manufacturing transformed at historic speed, reshaping industrial capacity for decades. During the Cold War, aerospace engineering, computing technology, and satellite systems advanced rapidly under defense-driven investment. The wealthy understand a difficult truth. War is destructive, but it is also economically transformative. New infrastructure must be built. New alliances must be funded. New technologies must be developed. That transformation creates asymmetrical opportunity. The average investor reacts emotionally, selling into panic. The billionaire asks, what industries will governments prioritize for the next decade? They don't invest to celebrate conflict. They invest to position for the new geopolitical landscape that emerges afterward. Because when power structures shift, capital flows with them. And those who anticipate the shift benefit from it. In times of peace, political access is valuable. In times of war, it becomes strategic currency. Billionaires understand that policy shapes markets more than headlines do. Sanctions, trade restrictions, military budgets, export controls, these decisions move trillions of dollars. So during global instability, engagement intensifies. Campaign contributions increase. Policy advisory relationships strengthen. Private briefings become more frequent. High-profile financiers like George Soros have historically participated in political funding and global policy initiatives. Others operate more quietly, cultivating bipartisan relationships that provide insight into regulatory shifts. This isn't necessarily about directing war policy. It's about navigating it intelligently. Because when sanctions are announced, certain industries collapse while others thrive. When military budgets expand, contracts surge for specific sectors. When trade restrictions tighten, supply chains reroute. Being informed early can mean billions preserved or billions lost. At extreme wealth levels, access is leverage. Private dinners, closed-door economic forums, confidential policy consultations. Information obtained in those rooms shapes strategy long before public legislation is finalized. During conflict, the distance between government and capital narrows. And those positioned closest to policy evolution can adjust faster than markets react. It's not about control. It's about preparedness. In global conflict, uncertainty dominates the public. But behind the scenes, influence reduces surprise. And in volatile environments, reduced surprise is priceless. When war breaks out, headlines often highlight another pattern. Billionaire donations, humanitarian aid packages, refugee relief funding, medical supply shipments, post-war reconstruction pledges. For example, Bill Gates, through philanthropic foundations, has funded global health and crisis response initiatives during international emergencies. But large-scale philanthropy operates on multiple levels. At face value, it reflects compassion. Va devastates civilians. Infrastructure collapses. Healthcare systems strain. Many wealthy individuals genuinely seek to reduce suffering. Yet philanthropy also carries strategic implications. Global companies depend on international markets. Brand reputation affects consumer trust. Political relationships influence regulatory treatment. Supporting humanitarian efforts during conflict can strengthen diplomatic goodwill and protect long-term corporate positioning. In unstable environments, perception matters. Beyond reputation, there is another economic reality. Instability is bad for business. Markets thrive on predictability. Investments require stability. Supply chains depend on order. When war prolongs chaos, capital stagnates. So supporting recovery aligns not only with morality, but with long-term financial interest. Stability is profitable. Reconstruction creates contracts. Aid stabilizes regions. Healthcare funding prevents broader crises. At elite wealth levels, charity is rarely impulsive. It is structured, targeted, strategically deployed. Compassion and calculation often coexist. Because in a globalized economy, reducing instability isn't just generous. It's intelligent. In times of war, the rarest commodity isn't oil. It isn't gold. It's clarity. The ultra-wealthy understand something most people overlook. Markets don't move on events. They move on expectations. And expectations are shaped by information. Billionaires often subscribe to private intelligence networks that go far beyond public news channels. These briefings may include insights from former diplomats, geopolitical analysts, cybersecurity experts, and even ex-military strategists. Some firms specialize exclusively in risk forecasting for high-net-worth clients. Their job? Model scenarios before they happen. Before sanctions are officially announced. Before troop movements are publicly confirmed. Before policy shifts are televised. Probability assessments are already circulating in private reports. This doesn't mean they know the future, but it means they reduce surprise. and reduced surprise reduces volatility in their portfolios. During major geopolitical events, institutional investors and hedge funds frequently reposition capital before retail investors fully process the news cycle. By the time mainstream media narratives solidify, strategic reallocations may already be complete. Because in war, timing is leverage. Information lowers uncertainty. Uncertainty fuels volatility. Volatility creates loss or opportunity. The difference depends on preparation. Speed matters in crisis, but insight matters more, because reacting quickly to bad information can be just as dangerous as reacting slowly. The wealthiest individuals don't just move fast. They move informed. And in conflict, what you know and when you know it can protect billions. Not because they are immune to chaos, but because they study it before it arrives. The final advantage of billionaires during war isn't capital. It's composure. When headlines turn alarming and markets swing violently, the average person feels fear. And fear triggers predictable behavior. Selling at the bottom, hoarding impulsively, making decisions based on headlines instead of long-term fundamentals. But elite investors train for emotional neutrality. Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." That principle becomes most powerful during geopolitical crises. War feels permanent when you're living through it. The uncertainty feels endless. The anxiety feels justified. But history tells a broader story. World War I devastated Europe, yet global markets eventually rebuilt. World War II reshaped global power structures, yet it also preceded decades of economic expansion. The Cold War created prolonged tension, yet technological and industrial growth accelerated during that period. Empires shift, currencies fluctuate, borders change, but capital adapts. Billionaires zoom out beyond daily headlines. They think in decades, not news cycles. Instead of asking, "How bad is this week?" they ask, "How will this reshape the next 10 years?" Psychological discipline separates temporary volatility from structural change. Because war amplifies emotion, and emotion is expensive. Those who maintain calm preserve options. Those who panic sacrifice them. In the end, wealth during crisis isn't just protected by strategy. It's protected by mindset. Here's the reality that often gets misunderstood. Billionaires do not benefit from chaos in the way many assume.
War creates unpredictability.
Unpredictability threatens supply chains. Threatened supply chains destabilize markets. And stable markets are what generate long-term wealth. So no, most billionaires don't want war. But they do understand something crucial. Chaos rewards preparation. While uncertainty rattles the public, the ultra-wealthy rely on systems already in place. They diversify globally so no single nation can collapse their fortune. They secure assets physically and digitally. They maintain liquidity. They cultivate access to information. They preserve mobility across borders. Every move discussed in this video connects to one core principle: optionality, the ability to act when others cannot. While the world reacts emotionally to breaking news, strategic capital executes contingency plans designed years earlier. Because at the highest levels of wealth, survival isn't reactive. It's engineered. And here's the deeper lesson, the part most viewers miss. This isn't just about billionaires. It's about mindset. Preparation beats panic. Structure beats emotion. Long-term thinking beats short-term fear. War exposes fragility, but it also exposes discipline. And in times of uncertainty, the people who win aren't necessarily the richest. They're the most prepared. Because when systems shake, positioning is everything.